Hello everyone, welcome to Hot Forex Morning Briefing. I'm Andrea Bihidi, a market analyst here in Hot Forex. So, what we have seen overall yesterday night, it was Asia struggling after the subdued inflation data out of Japan, and also after the weak US session with Wall Street closing at 0.4% losses. So we have seen all these actually rekindled concerns regarding the lack of demand and the flagging growth in the world. As of the forex industry and the currency market, let's say, the horrible actually US data, PMI data, Philadelphia index that were released yesterday night, they didn't seem affecting too much the dollar. That's why we have seen actually euro dollar remaining like consolidating around 113 mid area. Currently on the European Open, it's spike higher, reach 113.40 area. So the next the resistance remains at 113.50 over here. If that spikes, we might see a retest of yesterday's highs. On the other side, dollar yen, which actually was a bit yen actually pushed higher due to the Japanese CPI data yesterday. So it returned lower, reaching 110.70. Currently on the European Open is quite dodgy, trying to find direction. But overall, if you check the daily picture, it's like consolidating, bounding for the whole week actually. So the strong resistance remains at the 200 moving average, and support remains at week's lows, which is at 110.20, 110.18, near 20 moving average as well. So it's ranking. Remains to the downside in the hourly chart, support over here or at the latest low. A bit help, so it seems that CPI helped yen a bit. Now, the mover, however, for the day was dollar CAD, and that has to do with the strong oil inventories we have seen yesterday, helped the currency spiking higher, reaching 132.40 area. On the European, ahead of the European Open, however, we have seen it declining, finding some support for now, at least at the 20 period moving average here in the 1 hour chart. However, the real support stands at the around 132 area for now for the day, which was yesterday's swing as well. So it was helped by the oil inventories and also by the fact that that meant that US is at record production levels. So that actually pushed oil as well higher up to 57.57 area. It retraced overnight. Currently it's trying to pick up some of the losses that we have seen overnight and find support above the above the around $57 area. If that spikes, if it breaks that area, let me go to the 4 hour chart. The next real support is down to 56.60. Is Monday's lows, if I'm not wrong. Or Tuesday's lows over here. And if that breaks as well, the next support is at the around 56 area and the 38.2 Fibonacci retracement at 55.70. However, for the last 4 hour session is to the upside, keeping the support. It seems that the 20 period moving average in the 4 hour chart is supporting the asset quite well. So we might continue seeing to the upside. This doji candle is quite a tricky one because it seems that there is a indecision on the direction of the oil, but it keeps support. It keeps the support of 57 area, and that's good. So let's wait and see. Now, let's move on. Despite the fact that dollar CAD was the main mover and the CAD was the biggest losers, Aussie and Kiwi today have been the losers of the day. So as well overnight, so we have seen Aussie spiking lower down to 0.7067 area, and currently rebounded from that area, from that low, and picked up at 0.7115, breaking three fractals, three up fractals over here. So the intraday, the next resistance over here, it seems that it is trying to recover yesterday's losses, which were up to 1% nearly. So if we move to the daily chart, you see that there was a big daily candle, so it's trying to recover all these losses. If it managed to hit the midpoint of this bearish candle, which is at 0.7127, then we might turn to the upside again. The negative outlook will swing to the positive one in the daily time frame, if it recovers the 50% of the losses we have seen yesterday. As of today, however, it rebounded and keeps going to the upside. Bullish, a very strong bullish candle the last hour. So ahead of on the US Open and on the Euro Open, sorry. It seems that Aussie is trying to recover all losses that he's facing still since yesterday. So this it has to do with Prime Minister Morrison's statement that the banning gold imports, the banning announcement from China is not souring for the relations between the two countries, China and Australia. So he doesn't believe it will break them apart, let's say, it will make them fight or something. So the relations between China and Aussie is likely to continue despite China's banning gold imports. So that's why we have seen this recovery over here. Kiwi, on the other hand, overall in a downtrend, major losses for the last 2 days, break the 200-day moving average over here at 0.68, around 0.68 area. That has turned the overall positive outlook to a negative one for sure. So if we put also the Fibonacci in this daily chart, you will see that is moving below the 50% of the gains that he managed to do during February. So that's quite significant for Kiwi. So it's something that you should add in your watch list and take care of Kiwi. Is remaining below the 200 moving average, below the 50% gains. So he lost nearly more than 50% of the gains of February's gains. So the next real support in the long term is these lows over here, okay? 0.6720, 0.67, around 67 area as well. So let's wait and see what's going on. On intraday, however, so far today, it's managed to pick up. So in the hourly chart, we are seeing the rebounding from the lower Bollinger Bands area and retesting again the 0.68 level. So that was from Kiwi. Last but not least, gold, big reversal for the last 2 days as well, returning below 1330 area. So currently is consolidating at 1326. There is no clear direction for gold. As we can see, the 200 period moving average has been flattened. The same is flattening. The same we can see the same picture for the 5 and 9 moving average. They are quite flat. Let me zoom in. They are quite flat clutched, and they are quite flat, so that suggests consolidation. There is not a clear direction, even though it spiked above these two latest up fractals. Only a bigger mover, like a bigger mover, a big candle could actually suggest us or make us clear the right direction of the gold. But overall, it's on the downside for the last 3 days. So a spike above 1330 will trigger our tension further to the upside. That was so far from me. I tend quite lengthy. Hopefully I managed to help you by saying to you the news of the day. And have a great trading day for the rest of the day. See you later with Stuart. Bye bye.